Hi everyone, this is Dao Chai at the University Library right now. Uh, Sorry for the noise. We are going to be looking at compensation, accounts payable, taxation, right? So um, W2, W2 really, the form W2 really is not going to be accounts payable's responsibility, but I just want to show you guys that, and so that way we can get an idea of what the form 1099, the form W9, and the W8 has in relation. Okay. Okay. Let's start off with a little inspiration. Alone, we could do so little. Together, we could do so much. Helen Keller. Okay, so the compensation transaction. The payment of compensation is a transaction with tax consequences to two parties, the employer, which is us, making the payment, and the employee receiving the payment. The nature and the amount of the compensation are determined by contractual agreement between these parties. The employer's objective is negotiating. The contract is to minimize the after-tax costs of the compensation paid, and the employee's objective is to minimize the after-tax value of the compensation received. So high-ranking employees can usually negotiate with their employers on a personal basis uh, because they are transacting in a private market. Employers and employees can work together to achieve these objectives. Specifically, they can compare different compensation arrangement and evaluate the tax consequences to both parties. By doing so, employer and employee can design a package offering the greatest overall tax savings, um, divided between them on a mutual satisfactory basis. In contrast, rank and file employees typically transact with their employers in an impersonal public market. These employees can only accept or reject the compensation arrangement offered by the employer. In such cases, both employee and employer must pursue their own planning objectives independently. Okay, so let's differentiate between employees and independent contractor. The employer and employee relationship is characterized by the employer's right to direct and control how, when, and where the employer's duties are performed. The relationship is continual because an employee works according to a regular schedule in return for periodic payment from the employer. So let's look at independent contractor. As an alternative to hiring an employee, a firm can engage an independent contractor to do the same job. An independent contractor is a self-employed individual who performs a service for monetary consideration and who controls the way the service are performed. The independent contractor clients do not oversee work but can only accept or reject the final product. The relationship between client and independent contractor is impermanent, and the contractor can have any number of clients at the same time. Okay, so the tax consequences for work classification. Distinction between employee and independent contractor is critical for tax purposes. Employers must pay federal and state taxes on compensation paid to the employee. In addition, employers are required with both employees payroll tax and federal, state, and local income tax for the employee's wage and salary. At the end of a calendar year, employers must issue a form of W-2, right, to each employee. This form provides detailed information about various tax withheld by the employers on the employee's behalf. Just a quick look at Form W-2. We're not going to concern ourselves in accounts payable. We're not going to actually be dealing with this. This is more payroll stuff, but we just want to take a look at it because we want to compare the W-2 to the 1099. Okay, so we could be looking at workers' classification, right? The controversy The classification of the workers as either employees or independent contractors depend on the facts and circumstances of each case. The classification is usually straightforward, right? But sometimes workers' relationship doesn't clearly identify whether the worker is an employee or independent contractor. Let's look at the firm's viewpoint. When a firm hires a worker whose classification is ambiguous, it has financial incentive to treat the worker as an independent contractor. By doing so, the firm avoids both the employer's payroll tax and the administrative costs of various withholding requirements. It does not have to provide independent contractors with fringe benefits available to permanent workforce, right? So if the firm can engage an independent contractor for the same base compensation, it eliminates the incremental cost of benefits. So that's the firm's point of view. But then the IRS's point of view, in theory, the federal government should be indifferent as whether the workers are employed or independent contractor. IRS should collect the same employment tax on the workers' compensation either as payroll or self-employment taxes. The compensation is subject to income tax in either case. But realistically, the IRS has high probability of collecting these taxes if workers is employee. Like such in this case, the employees, if it's employee in this case, the employers is legally responsible for remitting both the employment tax and the income tax on the compensation to the government. So if a firm classifies a worker as an independent contractor, the responsibility for paying tax shifts to the contractor. The IRS has determined that self-employment individuals as a group have a relatively lower level of compliance, either because they fail to file a tax return or because they understate their business income. For this reason, the IRS taking an aggressive stance on respect to workers' classification. So let me repeat that. The IRS takes an aggressive stance with respect to workers' classification. So we got to make sure we get that right. Firms that classify workers as independent contractor must be aware of the risk that a revenue agent may challenge this classification on audits if the agent concludes that fact and circumstances tip the scale in favor of the employee status. The firm may find itself liable for unpaid tax, interest, and penalties. Okay. So talking the talk, companies that use independent contractors may head off a dispute with the IRS by making sure that all written reference to such contractors contain the proper terminologies. Okay, independent contractors are not hired or fired or paid wages or salary. Instead, they are retained or discontinued and paid fees. The companies should never refer to itself as employers, but as principal client. Finally, the department that deals with independent contractors should not be labeled HR, human resources, but contract relations. So here's a form 1099 miscellaneous, right? So when a client engaged independent contractor, the fees paid aren't subject to FICA payroll tax, and clients aren't required to withhold income tax at the end of the year. Clients must issue a form 1099 miscellaneous income to each independent contractor stating the compensation paid. Independent contractors are sole proprietors rather than in partnership with other individuals rather than compensation as a business income or Schedule C. Form 1040. Independent contractor pays self-employment tax on their net profit from their business and make quarterly estimates payment of both self-employment and federal income tax. So here is a quick look of Form 1099 that they would get from us. So what we would want to do is use the Form W-9 to provide current taxpayer identification number, right? To provide your current taxpayer identification number. So we would send this to our contractors, to our independent contractors, to the person who is required to file on information return with the IRS to report, for example, income paid, right? So we use Form W-9 to provide your correct taxpayer identification number to the person who is required to file an information return with the IRS to report income paid. That's what we're usually going to be dealing with. We're not going to be dealing with real estate mortgage acquisition, maybe acquisition, but not us. Right. So Form 99, request for taxpayer identification certificate. So we're going to send that out to our contractors or anyone that's going to be that we're going to send a 1099 to. Okay, so take a look at Form W8. So this form is for certificate of status of beneficial ownership for United States tax withholding and reporting entities. This form is used by foreign entities, right, to document their status for purpose of Chapter 3 and Chapter 4 as well as other code provisions. So foreign entities. So this is what we're going to send them. They're going to fill this out, send it back to us. Okay, and so this is how we get their information for foreign entities for tax purposes. Okay, thank you everybody.